Today, we're going to talk about two major events upcoming that are going to affect the market hugely. Then, we need to figure out a new strategy dealing with the recent market. Lately, do you have a feeling that it's harder and harder to make money from the market? Technical stocks dive down whenever you bought. Buying on news no longer works that efficient anymore. For example, no matter how good the unemployment rate improved, nobody cared. Shorting the market? You must be kidding. The only bankrupt guys I've ever seen on US stock market side are the ones trying to short the market. Who knows which day the market would bounce up crazy. So, how to make money from the market now? If I ask you, is today's market same as March? Is today's market same as the market in the summer? The answers are probably no. Let's see what's the difference between today's market and previous market. Take a look at a couple of critical upcoming events that's going to affect the market. 1. New $1 trillion stimulus package. We all know that the reason for the V-shaped rebounds of the US stock market is based on two things: the Federal Reserve support and the investors' expectation of economy recovery. This stimulus package is the determining factor of the economic recovery. According to most of the Wall Street institutions, it is even more important than the vaccine. With the argument going on between the Democrats and Republicans, we don't know when the stimulus package will be on its way. The major difference is the amount of stimulus package. Initially, the Democrats wanted to do $3 trillion, got turned down by Republicans. Now, Republicans wanted to offer $1 trillion, while the Democrats say 2 or nothing. Very interesting logic, but no point for us small investors to get into the politics. There are two take-home points. 1. The market is very nervous before the release of the stimulus package. With the uncertainty, for sure, we're going to see volatility, but we won't see a one-way market, no matter up or down. Second, the current expectation is $1 trillion. Market will shoot up if the $2 trillion version come out, but will take another dive if it is postponed or lower than $1 trillion. You know what's going to happen, right? Is it going to get passed before the election? Well, it's only possible to have it passed on the following days: September 30th, October 1st, 2nd, 5th, 6th, 7th, 8th, 9th. Why not other dates? Well, today is September 24th. They don't even have a bill yet. 26 and 27 are weekends. Ever since earlier this year, Senates weren't having meetings on weekends. September 28th, 29th, October 12th to November 6th, those are the dates Senates won't even be in session. So with the current disputes, good luck on sorting out the bill with the remaining 8 days. The second take-home point, say before the 9th, the stimulus package is out. This doesn't guarantee a one-way up market because the second critical event is about to come: the election. In September and October of the election year, the market volatility is usually high, and the days market went down almost double that of the days it went up. This again showed the market is usually nervous about the uncertainty. The fact that the House and Senate are in different parties' hands makes it really hard to pass any economic boosting policy, thus preventing the market from heading up. So, what's the conclusion here? Both points have the same conclusion: increasing the volatility of the stock market and keeping the market swinging. I believe the market won't grow much higher in the next couple of months. Instead, it will swing down. This is going to be different than the last 6 months. Therefore, we need a new investment strategy to adapt to the market trend. There are lots of investment strategies, but we can summarize them into 3. Buy uptrend, sell low trend. Buy and hold, buy the dip, sell the rip. Same thing, we can summarize the market into 2 types: one-sided market, swinging market. Now let's compare the 3 strategies' performance in the 2 types of market. In a one-sided market, buy uptrend, sell downtrend strategy performs much better than the other 2. This strategy is sometimes interpreted wrong, sometimes even called a rookie's mistake. The most important thing you need to understand using this strategy is not to go against the trend. That's it. No more. Take the last 6 months, for example. I started selling my stocks before the first meltdown and sold most after the second. My loss is a lot smaller than most of the investors. In May, I started buying stocks in uptrend, investing over 50% of property all the time. My profit is a lot better than most of the investors. Of course, only percentage-wise, or I don't have to blab here. If you think this is just one example, most of the good stocks in the market has been growing like that almost a decade. If you keep on buying them every month when they're in uptrend, you probably don't have to listen to me anymore. Now, it's our star of the day. Buy the dip, sell the rip. In a swing market where you don't have an obvious trend, it's the opposite. Buy the dip, sell the rip. This behaves much better than the other two. If you want a no-brainer strategy, then buy and hold are never the worst choice. It's too passive though. The profit is limited, especially if you start with little capital and cannot afford good company stock. However, if you can make some adaptation and make way more money, why not? Let's see what happened before the last election. Here's the September and October market before 2016's election. You can see it's up and down, up and down. Swing for about 2 months. You can almost say for every rebound there's a good selling point and every dive there's a good buying point. Take a look at the last couple of weeks graph. Does it look a bit familiar? It's similar to what happened 4 years ago. So it is time to switch your investment strategy at least for the next couple of months. Well, you might say buy the dip, sell the rip. Easy to say for you. True. Even me, I can't guarantee that every time I buy in at a low point and sell at a high point. That's almost mission impossible. However, there's one way that suits best of this kind of situation. Making good profits fast and reliable, while bearing minimum amount of risk. On Sunday, my next video interpreting this strategy with real life examples will be posted, together with what are the next good stocks for next weeks. If you don't want to miss that, please subscribe and turn on the little bell icon. See you then. Thank you.